Sitting by with us, so let's get a quick comment from him. Dipan, your thoughts on the Ease My Trip stock? I mean, the management was very confident about the growth there. Bookings are at an all-time high. Is it worth still buying into?
Yeah, well, it is certainly expensive, Sonia. But what really caught our eye was the fact that during the pandemic, this company reported profits. I think it must be the only company in the travel industry globally which was able to report profits, no doubt from other income or whatever. But they run a very tight ship, and the cost structures is what we really appreciate. Maybe at correction, when you get it at a reasonable price to earnings multiple, you could look at this company. It's going to be a steady, secular, compounding growth story. And the way the travel industry is, it's very difficult to set up a new travel portal now. So there's going to be more and more consolidation, and that will benefit a company like Easy Trip Planner. So generally positive on the company. It's only thing that it's on the expensive side. So you'd like to wait for a bit of a correction.
On that point, Dipan, I was thinking, in insurance, they're an aggregator, right? They allow you to compare the best fares, etc. In insurance, who would have thought that suddenly, IRDAI wants a portal set up like Bima Sugam, backed by private insurance, mind you, right? And they're saying, we'll cut commissions, and there was always policy Bazaar, which was the leader in that space. It's obviously, a wild thought, but the parallels are quite clear because the same kind of business model in terms of aggregation, allowing you to compare, finding the best fare, what works for you. So convenience is basically what the OTAs bank on. So who knows? But yeah, take your point. I want to read out a specific quote on these new age things that we were talking about. This is Samir Arora of Helios, and we have this quote up. And it's an interesting way to look at it. And Dipan, you commented on this earlier, but I don't know if you have any additional thoughts. I want to read this up. We can put this up. Samir says, just because PE funds and pre-IPO investors can sell their shares after their lock-in ends does not mean they have to necessarily and compulsorily do so. So they don't have to do it just because the lock-in is ending. Selling by them soon after lock-in's end is a reflection of their view on the companies and not just a liquidity-driven event. So it's not just a technical liquidity event, and so they have a choice to stay on, hang on. There's only one exception I can think of is when the fund life itself is ending, right? And you have to liquidate to return money back to LPs, etc. Any thoughts on that comment from Samir? Go on.
See, Prashant, all of these private equity investors have made very good returns on their investment. And if that's the logic, then no private equity will ever sell any profitable holdings. They also have their compulsions and their selling strategies. So if they feel that they need to book profit, then that's perfectly fine. I'm looking more on the positive side that whatever they want to sell at some price point did get absorbed, and that speaks volumes of the kind of depth which is there in our capital markets and the kind of interest which is shown by a whole host of global foreign investors into buying into Indian equity. And the new players who are buying into these companies, they are going in with their eyes wide open. They have seen the correction in the price. They have analyzed the business model far better. They have seen the brief history as far as listing is concerned. And they have a 3-year cap of a view. And they still expect these companies to do exceptionally well and create value going forward. And I think that's all we can take from this. Professional investors have that compulsion when it comes to selling. So there's nothing to be perturbed about the wave of selling which we are seeing over here. Fact is, it's being absorbed pretty well, and I do feel stock is going into stronger hands.
Okay, Dipan, thanks a lot for joining in, and have a great day. And thanks for speaking to us about a whole host of stocks. We'll slip into